the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Yeah, Warren McCarthy's with us now from Century 21. Good evening to you, Warren.
Yes, good evening, John. Good to be with you.
Now, look, we talk a little bit about where the economy's going. So BIS Oxford Economics have crunched numbers. They think we could be in for a deeper downturn than initially thought, followed by a strong recovery. So we're talking specifically about the housing market. So where do you think it is? Because the signs appear to be that we're going through a recovery phase now.
Yeah, it's an interesting article that came out in The Australian with Robert Mellor from BIS Oxford Economics, but I have to say the auction clearance rates that we've just experienced on the weekend have been the 8th week in a row in which the clearance rate's been above 70%. Sydney saw 78.5% over the weekend and Melbourne 74%. So the auction market is certainly not stagnant. It's improving. It's showing signs that the market is recovering as a result of what's happened since the election, the 2 interest rate drops, the removal of the loosening of APRA's guidelines for lending. And look, I think what the BIS people were trying to say was that the new commencements of property, the new building of property, which impacts supply, were contracted from the final financial year just gone by some 16%. So there were only 192,000 dwellings built, and the expectation was that would far exceed that number. And so with the impetus given to the demand and the fact that the supply's come off, what I can see there, John, is that there's only going to be a situation where pent-up demand will again occur, which will force up price. Yeah, and I can see that happening within the next couple of years.
Yeah, because we've been talking for years about the need to build housing for the large numbers of people who are coming into our cities to try and deal with the issue of house prices. Now, we've got a building boom happening in all of our major cities, certainly. We've seen issues with poor quality build and some of those issues, but simple maths tells you if the immigration rate, look, it is being scaled back. There's no doubt. The government's not saying a lot about it, but it is being scaled back, but it not being scaled back to the point where you're going to have a lot of things lying around empty, I would have thought.
Well, that's right. Population will continue to grow. The net migration and the net immigration numbers are certainly going to be on the rise. And the issues around build quality and the insurance concerns that have come up in recent times will just mean that those supply timelines will stretch even further. And it is a demand versus supply issue. It's basic economics, and I think you'll find that will create an opportunity for buyers that are coming into the market now and take advantage of the next upcycle that we're starting to currently just see commence.
Yeah, and we're first home buyers under the scheme the government announced during the election where it's, you can do it on 5%, they'll guarantee the next 15%, so you can do it on as little as 5% and have the rest of it borrowed. I guess the attitude of the banks will come into play. They'll have to make an assessment about where things are going, and if they think things are going to be okay, then Bob's your uncle, away we go.
Well, that's right. All associated with risk, and the banks certainly look at that very, very closely, especially after what the Royal Commission had dished out to them.
Yeah, we're broadcasting, of course, right across the country. A lot of regional centres, and people would know what's happening in their own areas. Well, what's the overall picture from regional parts of Australia?
Well, it was interesting to see that regional Australia had some great uplift in from the median price from quarter on quarter or year on year. And I'll give you a few examples, John. In the Coffs Harbour region in New South Wales, they have a median price of around $480,000. But year on year, they've had an increase in that level of value of 5.49%, which is right against the trend. In Bendigo, Victoria, $405,000 for their median value, and they've had a quarter-on-quarter increase of 8.69% and a year-on-year of 5.74%. And look, I think some of the things that people should look for in regional areas is their jobs prospects, for number one. Are they on the improve? Are they stagnant? What's the investor demand like locally? Ask the local real estate agents what's doing there. The infrastructure of the area. Are there any projects that's going to stimulate that particular community in those areas? And look, there's a lot of reasons why people go and live and work in the regional areas to get away from the city areas and just have a tree change or sea change. So look, the regional marketplaces are certainly worth consideration for the long-term real estate investor or owner-occupier.
Once upon a time, they had to go and look and talk to people. These days, you can do it via the net, read the local papers, look at the listings. You can get a really good picture without that actually going there.
Incredibly important that they research that particular item and make sure they've got every bit of information covered. And, as you say, very easily done online.
And Warren, just on warehouses, commercial property investment, but warehouses, industrial units, what sort of investment are they?
It's an interesting one. People are looking at the moment to say, well, look, the bank aren't giving me much interest rate return. I've got to look at the share market, or if I do and look at the property market, is it residential or is it possibly commercial? And with that, there's a few things. Higher yields are generally received from the commercial environment, and you get tenants that stay longer terms than residentially. Residentially, they're probably there about 10 to 12 months on average. But with the commercial warehouse type variety of property, it's probably around that 3-year level. The yields they're getting as a return on that investment are probably sitting around that 4 to 6% as opposed to about a 3% for residential. And, of course, you get other advantages like the tenants might be paying all of the outgoings, the rates, the taxes with a warehouse versus not with a residential property. So certainly, again, homework to be done, research to be done.
All right, very good. Thank you so much, Warren. Very interesting tonight, as always. Thank you so much.